Welcome to the Meat and Potatoes podcast. Today we're joined by Lanham Napier, who is the CEO and co-founder of BuildGroup, and Bud Scruggs, who's the managing director of Cynosure Group here locally. And Lanham's out of Texas, if you can't tell by the shirt. How are you guys?
Yeah, fantastic.
Love it. Cool. So it's always fun to have two people on the podcast. I'll throw some questions out that you guys can field individually, and then I've got some specifically for each of you. So we'll start with you, Lanham. What is BuildGroup, and where did the idea come from?
All right, so BuildGroup's an investment company. We are taking a long-term patient capital approach. We invest in B2B SaaS companies. We're trying to be that piece of equity that shows up to really accelerate things, and we do that with an operator lens. So the idea came from my time as CEO of Rackspace. I was super blessed to be part of that company when we grew from not a lot of people to a couple billion in sales. And for a business nerd like me, I mean, that is Disney World on steroids to get to do something like that. And when I was building it, the thing I wanted was just we had amazing investors, but I wanted investors that took a different perspective. I wanted investors that showed up with real entrepreneurial scar tissue and just showed up with a lens around being in the game for the whole time. And so it's not that we are necessarily permanent investors at BuildGroup. I just think it's about providing the conditions for businesses and leaders to achieve their potential. So when the CEO says it's time to exit, man, I agree it's time to exit. Just between here and there, I just want every company to know they've got some part of their cap table, their investor base that's in it for the duration. So that's us at BuildGroup.
Gotcha. So a VC in a different model invests in a company, and they'll obviously want an exit, either an IPO or an acquisition. And we've all heard the stories or seen it happen where they might step on a throat here or there to get that done. And you mentioned permanent capital, obviously long-term growth. So you're in it for the duration, right? There's not going to be that throat stomping.
Correct. Yeah. So I should note for the audience here, Bud is our largest shareholder and board member. Okay. So, hey, Bud, don't worry. We are going to deliver some returns for you. Okay. Before this whole game is over. This isn't just the black hole where it sucks your money up. Okay. So, but no, Garrett. So the notion is, we are a holding company. We're not a fund. We're solving for after-tax wealth. All of our shareholders are families, so we're different from funds. Most funds out there solve for pre-tax IRR because they're trying to raise their next fund. We're a long-term vehicle. So we're just trying to solve for long-term compounding. And I think the best way to do that is to hold on to it for investments longer and hold on to investments until the CEO and management team says, look, we're done. We've taken it as far as we can go. Let's exit. Let's all exit together. So that's, our philosophy on it. We're, 4 years into this mission. Okay. And so it's just about how do we create the conditions to where, entrepreneurs are pumped up and the senior team has the resources they need to keep going. And we just try to share some wisdom every now and then.
Great. So the idea came to you as you were in the trenches running Rackspace. You obviously can't do it all by yourself. How have you built your team to follow your vision and operate in the same way that you would operate?
Well, yeah. So if you look inside of BuildGroup, we've got a lot of folks that are former operators. That's number one. And now look, we are, as we grow, we're adding some folks in additional, we call everybody works at BuildGroup a builder. We're adding other builders, okay, that come from more of a finance background. But if you look at our core nucleus, it's, operating people. All right. And this is why when you look at our shareholder base, we're trying to create alignment from our shareholder base all the way through to the company in which we invest. And so a guy like Bud, former CEO of Lucadia, extensive entrepreneurial background, right? Being part of a family that's, an iconic entrepreneurial family there in Utah. I mean, all that lined up super nicely for us. So it's how do we have on our board people that have built companies before, in our shareholder base, people that have been invested in companies until the companies hit their potential. And then inside of BuildGroup itself, how do we have a roster of builders that have a passion about building and are patient and persistent and have some grit? Because look, the longer you stay in something, the more likely something bad's going to happen, right? And when it does, you just got to recover, man. It's just how life goes. So that's how we do it.
Great. And so, but as mentioned, you guys are the biggest shareholder and a big part of the Build Group. How did you guys get to know each other, and what ultimately helped you decide to become a shareholder and partner there?
Well, we have another investment in Texas, and we're introduced to Lanham through some mutual friends. And my partner, Keith Taylor, is one of the genius structure people that I've ever worked with. And he and Lanham, I was involved in the periphery, but he and Lanham, I think you two talked for about a year on how to structure something that would achieve, the goals that Lanham had laid out. And at Cynosure, we put to work a lot of money, but one of the things that's important is to know what you're not good at. And we don't have any talent or even aptitude for early stage or even growth stage tech companies. And yet we have a lot of our investors, and we ourselves want exposure to it. And so when we met Lanham, the alignment there was just so strong, because at Cynosure, for example, we are perfectly happy to have a minority interest in a company. We really want to get behind founders. That's our whole business model. And it's very similar to the approach that Lanham took. And one of the things that Lanham, I'd love for you to talk about how you got there, but for the nearly a year we worked together to try to figure out how to structure it and how to attract other investors. Lanham invited me to be on their investment committee. And so I would be on these calls, and I was as impressed by the deals that they turned down as I was by the deals that they wanted to move forward to. And I remember, before we got organized, they took a vote, and I voted, and somebody gently reminded me that I didn't have a vote. But they appreciated the gesture. But the thing that the absolute openness that he has, and then secondly, I come from working with a lot of guys that are finance guys, and I labored under the misimpression for years that marketing people were just business people that weren't good at math. And Lanham's team, in terms of understanding the market and the depth of work they do into the client experience and to the market space, more than anything else, and Lanham, if I'm overstating this, you correct me, but I think the number one filter for Lanham is to find a founder / CEO that actually wants help. The kind of people that come up with brilliant algorithms and code and software, a lot of times they don't have the natural set of gifts to work with so many other areas that are involved in a business. And I've seen Lanham time and time again as part of the due diligence. And he's come to me before. He said, "But this is a great company, but the founder CEO says he wants help, but he doesn't. And we're not going to do it." So Lanham, I don't know if I've misstated that.
No, that's accurate. I just think that at the end of the day, for companies to achieve their potential, there has to be an element of humility, in the boss, so to speak, and the CEO, to understand, it's what you said, but it's like what we're good at and what we're not good at. And when we get outside that circle of competency, we just have to have the humility to ask for help. And I think that the weird thing going on in the world right now, there's, at least in the press and stuff, there's so much almost idolatry around these, omniscient founders that call it right forever. And, all the success I've had in life, it's not because I'm anywhere remotely near omniscient. Man, I'm just blessed to be working with people that are super talented. The feedback office is open, and we'll smack each other around when we get off the tracks. And so as Bud talks about having people that want help, what we're super interested in is just the level of functional excellence in that senior team. Does that senior team have an ability to push on each other and stay together? Is trust high? Can they disagree and commit? Can they make decisions faster because they're aligned? Do people understand their swim lanes, but then jump out of their lane when a compadre needs help? So part of what our philosophy on is building a company is just a human performance event. So the humans matter the most. And then the place we started there is with the CEO and the senior team. Because if we can get the CEO and senior team performing at a high level, man, things are going to work out just fine. If those folks are at each other's throat and don't trust each other and bitching all the time, things are going to be really hard, and nothing's perfect. I mean, I do think all these entrepreneurial situations are very dynamic. Things go up and down. It's just how it goes. I mean, these things are complex systems, but having an ability to recover and having trust in the room and having the humility to accept and act on feedback from others, to me, that's the stuff that separates the good from the great.
Right. Really cool. So after you've made your investments, how active are you in your portfolio companies?
Well, it totally depends. I mean, what we aspire to do is to be, the most valuable player of that cap table. All right. And so sometimes that means we're super active with the board. Sometimes that means we're literally on the phone with you every week. And so, the way I tend to think about, what I encourage CEOs to think about, is how to create a system around themselves so they can be at their best. And that system's going to be dynamic. Things are going to change as conditions change. But, the way I think about it is based on our entrepreneurial experience at BuildGroup, we're 85% relevant. We are not 100% relevant. Every situation's a little different, but I do think there's some universal principles that are applicable across, growth stage companies and B2B SaaS. Right then is that final 15%, that all comes down to that senior team and tailoring it. And I think that's actually where the magic is, in that last 15%, and so I kind of feel like we could be an accelerant. You want to talk weekly, we're happy to talk weekly. I'm happy to sit down with you once a month and spend a whole day with you. Because I actually, my sleeves are rolled up. I actually like to work on things. I'm a worker bee. It's just how, the big man made me. So my perspective on it is, let's tailor the way we serve a company based on that company's needs. So I'm a big fan of servant leadership. I think as an investor, we're there to serve that team. Okay. The injection of wisdom, what I aspire to call wisdom, our ability to activate on problems and help solve, that's our role. But a lot of that, it has to be a collaborative thing, or it's not going to work.
Right. I'm always interested in this question. I'll ask you first, Lanham, and then you, Bud, same question. But you've got your teams, right? And there's opportunities that come through, and there's pitches and chats and negotiations. How do you guys at BuildGroup decide who to invest in, what to invest in, how to invest in? Do you have a veto? Is it are there dueling pistols to solve things? How do you guys do it?
Oh no, that's super cool. Okay, so there's all this. There's the IQ and the EIQ. Okay, the IQ is analytics, scorecards, metrics, blah blah blah. Make a model. Woohoo! I've never made more money than I ever make in Excel. Right? Excel is this amazing money-making apparatus. Right? Okay, so that's all the IQ stuff. Then the EIQ stuff is the decision-making itself, which you're referencing, Garrett. Yeah. And so the way, we have a committee. The committee is actually one person, one vote. We have norms around, look, if we can't get, there's only a handful of us. If we can't get all of us to agree to make the investment, then yeah, in essence, people have a veto. Is how it works. Okay. We think for us, we think that creates the right conditions to create a high threshold and a high decision bar.
Yeah. So there's no sour grapes and hurt feelings, or if there are, they're passively aggressively pushed down.
Look, to me, the sour grape thing, man, the nice thing about entrepreneurship, there's always another opportunity.
Yeah.
So to me, it's a little bit like, no one's going to bat 1,000. Not everything we do is going to work. We're going to make boneheaded decisions because we're humans, just part of the joy of being a human. Sure. All right. But I think, the ability to disagree and commit really matters. The ability to have the humility that, when we look back on things, we all think, oh yeah, I called that exactly right. Whatever, dude. Life is probabilistic. Hindsight creates this illusion of, oh, I got it exactly right. But that's complete bollocks. Right? Sure. It could have played out lots of different ways. Yeah. So let's just keep swinging at pitches we think we can hit. So,
perfect. Yeah.
Lanham, why don't you, if you don't mind, Garrett, I think, Lanham, why don't you talk for just a second about the basic criteria that you use as a filter, both in terms of revenue and growth, and then also I think it'd be a real mistake if we left this podcast without at least having a shallow dive into the modern business model.
Okay. Yeah. All right. Fair enough. So, thank you, Bud. So here's a real, quick way to think about selection criteria for us. It starts with B2B because that's the only thing we know about. So that's our circle of competency. It's SaaS, software as a service in that context. When we look at revenue thresholds, what we're trying to use is a revenue threshold as a proxy to understand product market fit. Okay, so we like it when things are around about 8 to 10 million in annual recurring revenue. Now, have we invested in companies when they're smaller? Yes. We've done it when they're smaller because we felt like we had enough data to feel good about assessing product market fit. And so what do we mean by product market fit? This is the comment Bud had earlier about marketing folks, whether or not they're actual business people. All right, so what we want to do with product market fit is we want to understand the outcomes delivered to customers and how customers feel about it, right? So we are big fans of net promoter thinking, right? And just the notion of, do we deliver products that people get emotionally attached to and they're engaged with it? And so we're looking for that type of outcome. So it's a product market fit used as revenue. Then we want to get into some unit economics. How efficiently does a company acquire customers? How long does that customer stay? What's the lifetime value of that customer? And there's different metrics to do that. There's a SaaS magic number, all this kinds of stuff. Okay, but in essence, it's, do customers really like it? Do the unit economics work? Is there a senior team where we feel like, the feedback office is open, that share our values in a way that we want to get in trouble with them, right? Because entrepreneurship goes up and down. There's always that trouble moment. Okay. Yeah. Then when we get through all that, it's just a discussion about, how long do people want to go? What's the appropriate structure?
Awesome. Very cool. All right. So question to you, Bud, how do you guys at Cynosure, how do you guys decide who to invest in, how to invest in, and why to invest in?
Well, to avoid being repetitive, it's really not that much different, except it's not at the technical or SaaS base. We have done one SaaS company, but it had been around for 10 years. So what we focus on is EBITDA, not revenue. So the company needs to be significantly north of 5 million in reliable EBITDA. We don't do turnarounds, at least not intentionally. And so if there's not a management team that we really want to get behind, and in situations where they're only looking for money, Cynosure, and for that fact, BuildGroup is never the right partner. So the big differentiator for us is that we are perfectly happy to be a minority shareholder. There are some companies where I think we own 18%. The founders own the rest of the company. And the one showstopper for us, we will not invest in a company where the founder management ownership team doesn't own at least 25 or 30%. And we're perfectly happy for them to own 50, 60, 70, 80%. And because I wake up every morning knowing that I'm aligned with our management team, in most cases, because they own more of the company than we do.
Yeah, that makes perfect sense. So, Lanham, as you were out fundraising for the BuildGroup, family offices were your target there. How did the initial meetings, the initial days go? You obviously had street cred as the CEO of Rackspace and stuff, but what were some of the fun stories as you landed?
Oh, dude, no, I totally screwed it up for a while. Okay, so hindsight, right? I navigated it fine, but I did not start out thinking that the right investor base for us was family offices. Okay, actually, what I had a lot of energy on and a lot of conviction on was I wanted to do a long-term vehicle so that companies and leaders can achieve their potential. And what I felt like traditional fund structures is they're kind of on a 5-6 year investment hold period. And I think sometimes, I was blessed to be part of Rackspace for 14 years. So I feel like if you can go that long, even better, right? But because of my own ignorance, I just thought the private equity world was made up of institutional investors. So I started calling on university endowments, and soon discovered that I was not a fit, amigo. So what happens is, I'd have people say nice things to me like, okay, look, we believe in you. We want you to do a regular fund. And I'd say, no, I don't want to do a regular fund. Now, if you believe in me, this is about this compounding thing. And the way I see it is, man, if you're running the University of X, you actually should be able to make the longest investment decision ever. I mean, it turns out I personally have an expiration date. The University of whatever does not, right? It should be here 300 years from now, kind of thing.
Yeah.
But because there's just so much energy already in the system around, man, a GPLP structure, do a regular fund. We'll commit to your first one, then your second one, then your third one. That's just what that world wanted to do. And so, I was kind of down on my luck thinking about it and was really waffling about whether to stick with an investment thesis of a longer term duration and the necessary structure to make that come true. And that's actually when I started to bump into Keith Taylor. So I started thinking to myself, man, I was about maybe too strong, but I was thinking hard about, okay, maybe we just do a regular structure. That's what all these universities want. Let's just do it. I'm not going to fight the market kind of thing.
Right.
But then I bumped into Keith Taylor and a couple other families, and people told me, hey, man, our family would do that because we like to go on long-term journeys. So what I discovered is the only person that's up for a 10 or 15-year investment is somebody that made a bunch of money on a 10 or 15-year investment. That's it. Nobody else is up for that deal, right? If you haven't been on a 12-year entrepreneurial journey, nobody wants that. Okay, so we just kind of discovered through knocking my head against the wall that, the right fit for us, the place where we think we can do good work for folks is with folks that have been on similar entrepreneurial journeys.
That makes sense. Go with the flow there. So with an investment holding company, looking at your website, you'll obviously do these private investments, but then there was also the public companies that were mispriced.
Yep.
Was that always the intention, or was that something you saw later on as an opportunity?
It was certainly something that we thought about, but I hadn't put a bunch of energy behind it until lately. I think what's happened as, the markets, private markets are, I don't know if they're all-time highs, but it certainly feels, pretty stratospheric. Yeah. Okay. And so it's, you have these interesting reinforcing loops around certain companies with certain characteristics. There's no valuation ceiling, right? And then there are others that are, out of favor and whatnot. Okay. And so what our belief right now is there's relative value in small cap land. And, these companies aren't perfect, right? That's why there's relative value there. Okay. But the notion is if we can show up with some operating chops, and get these companies headed into higher growth trajectories, we feel really good about the risk return trade-offs there. It's that you can structure a security well, you've got a company that's already established. They tend to already be profitable. It's how do we accelerate the outcomes? All right. And so that to me is a more of a PE downside, VC upside kind of thing. Yeah. Whereas private markets, even in growth equity land, it's starting to feel a lot more like VC downside, VC upside, and so that's what's interesting to us about small cap investment opportunities and doing pipes into them. It's the risk return relationship.
Well, what was funny, Lanham, I forget what month it was, but Keith Taylor and I, from a direct investment private equity point of view, we had come to the same conclusion that the public companies, especially in the small cap, were likely to reprice more quickly than private companies were. And so we were looking at a company, and we called Lanham and we said, hey, we're looking at this company in Texas, and it's a little bit of a departure for us because we're thinking about doing a private investment in a public equity. And Lanham says, well, now that you mention it, and we both kind of pivoted. And not that our bread and butter or meat and potatoes isn't in privately held companies, where we could find good opportunities with public companies. And again, it's the same thing when you have a management team that is really looking for collaboration. And it's amazing. A lot of CEOs think that collaboration is a one-way street. That means the board just does what he asks them or she asks them to do. And the fact is, collaboration needs to be a two-way street.
Yeah, exactly. So you guys are talking about PIPE, which is a private investment in a public entity, right?
Yep.
Okay. Very cool. So
Yeah, that's what we call industry jargon.
Little acronym there.
You notice when he's talking with me on the line, Lanham feels the need to explain what SAS stands for.
Well, there's a big S and two little A's and then a big S. It's got its own. All right. So collectively, you guys both are long-term visionaries as regarding business and investments. With obviously 2020, we haven't said the word COVID yet, which is great. And that will hopefully be the first and last time we say it. But how have your mindsets changed a little bit in 2020, and what does the next 5 to 10 years look like for your respective investment groups?
Well, give me this. I'm feeling the need more and more to qualify kind of the headline that I've published in the past, and that's this notion of long-term investors. And I think I've moved to timeline agnostic to smart-term investors. And Lanham has already alluded a couple of times that we both tend to follow the lead of the CEO founders, and when they're ready to go, we want to be supportive of them. And sometimes with us and Lanham, I don't know if you've had this situation. We've had situations where we've helped the founders or the management team get to a point where they have access to a lower cost of capital. I mean, we expect significant returns, and sometimes management teams decide that they want to keep plodding along and are willing to accept smaller returns, and there's capital out there that will accept that. So I like to think of us as a smart firm. And Lanham, I don't know how much you want to talk about, but I remember on one company where we thought there was just a great, second and third horizon there. And you and your team came into a board meeting and said, look, there's a consolidation going on in this field, and we've either got to put 100 million in to be a consolidator, or we've got to be a consolidate team. Is that a word? Anyway.
Yeah. We're either going to do some eating or get eaten. No, so I just think, to Bud, to your point, I like that phrase, smart term. I hadn't heard that before. That's pretty good. It's like smart beta, smart term. I think the point underlying it is just that, man, one thing about 2020, golly, are things dynamic, and market conditions, I think, in market change has accelerated. So the notion of just being able to accept new data, process that new data, even if it conflicts with our original thesis or our whole movie, and then act appropriately, to me, is part of what, investment wisdom we all need to have. Is that I think, I'm a long-term stubborn bugger, all right? And yet, I may have the greatest investment thesis in the world. The problem is, with the rate of change going on in technology and the rate of change going on in the business world, these original ideas can get blown up in a hurry. Things are dynamic and things shift. So the company that Bud's referencing, that's exactly what happened. We went in thinking about our organic growth strategy, and then realized, pretty quickly after a couple of years, that there were some really big players showing up with ginormous checkbooks. And, the acquisition growth strategy was going to trump the organic growth strategy. And that's just how it goes, man. It's sort of like, none of us are really in control, right? My mind likes to tell me I am, to make me feel better about today, but it's just accepting the fact that these things are dynamic. That's critical, I think, because it's more about the way I've always thought about building a company is, we need to have a North Star, but whether we're north by northeast or north by northwest, I don't care as much, as long as we have a lot of course agility.
Sure.
I think being agile is more important than calling it right. Because, most people I know just can't call it right. I mean, it's just how it goes. All the forecasts I ever delivered when I was CEO of Rackspace, I never hit it. I either beat it or missed it.
Sure.
Just how it goes. It's like I never get the the meat pitch right down the middle, you know? So it's kind of like, we just got to deal with the change, man. And that's just how it goes. Then on your 2020 question, Garrett, I'm actually totally optimistic. Okay. Yeah. So here's my case for optimism. I think that most of the leaders I admire throughout history had to suffer a lot. And I think suffering is necessary for humans to get centered. And right now, I think there's a whole bunch of suffering going on.
Sure.
You know, and so my case for optimism is I think we will wake up 7-8 years from now with these emerging leaders, you know, in our country. And having gone through this very formative period, you know, we will, as a people, we'll be more centered around what really matters. We'll be more centered around, you know, what connects us together. And we'll have leaders step up in a way that inspire us to follow them, you know? And so I'm the optimist. Now, look, I think in the words of Winston Churchill, we may exhaust every other possibility till we get there. Okay. And hopefully that's what we're doing right now, because we can't agree on much. All right. But I'm optimistic that, you know, we as a country, we haven't had a real, you know, kick where it hurts moment like this in a while.
Sure. And
I think it's necessary for us to get centered and remind ourselves how special we are and how we care about each other and, you know, opportunities ahead.
Absolutely. You guys are both, you know, seasoned operators and managers of money. And you're asked a lot for money and advice and every other type of thing. But I'd like to know, like, what's the advice you get asked for most often? And what's kind of some of your best answers?
Well, I mean, I think one of the things that I'm seeing, and again, I like your sensitivity. I'm a lot more seasoned than Lanham is, but I just think there's no substitute for focus. And when I hear people talking about a side gig, I just don't think that works. And young people are people early in their careers. What I like to highlight for them is that their time will never, ever be cheaper than it is right now. And so now's the time to gamble with it. And as Lanham talked about the stealing, refining aspects of suffering, I have a difficult time wanting to work with people that haven't experienced failure. And one of the things that when we hire, one of the key questions that I ask them is, what's the second biggest business mistake you've made in your life? And a lot of times they'll say, well, why the second? And I'll say, because you're too embarrassed to tell me the first. So let's just skip right to the second. And I said, I want the experience in your life where you sat in your car afterwards and you put your head on your steering wheel and you said, I don't even know if I want to tell my wife or partner at home. This was such a stupid decision. And people that can't answer that question, I don't want to work with, because it shows an absolute absence of self-reflection. So my three things is to be all in. Don't try to accomplish great things as a side gig. You know, the value and power of focus. Number two, the best thing you can do in life is fail fast. And again, I've worked with Lanham a couple of times where it was clear things weren't going to work out on things, and making that decision early. And then the third is somebody once said that people that want praise more than correction are likely to get neither. And one of the things that I have been so impressed with Lanham is early on, and again, given my lack of tech background, I really wanted to graze at the edge of the herd on some of these early decisions. And there was more than one occasion where Lanham or one of his partners would call me and say, Bud, you had some reservations at the meeting. We know you have some experience in this field. Let's talk until I understand what your reservations are. Now that is, we can talk about that all we want. It's an incredibly rare attribute. You know, that so many people are interested in making the pitch, completing the sale, and the wisdom of looking at the corner of their eye, seeing somebody that has had some experience and seeing some reticence and circling back in a safer way is a really important. So seeking correction every bit as much as we see parade. So, Lanham?
First of all, that's tough to follow. I will say in my own personal season, I turned 50 a week ago, and that's a real number. That's like, yeehaw! Okay, we're somewhere in the third quarter, right, of this deal. All right, so I think the people ask me about all sorts of regular business stuff all the time.
Sure.
How to grow faster, what should the product say, all that IQ stuff we talked about earlier on how to assess an investment opportunity. Mm-hmm. To me, what I look for in people is how quickly we can migrate from that into the harder stuff. And I think the harder stuff is really understanding that individual leader's capability. So when Bud's getting to, man, tell me about your biggest mistake. Do you have the ego strength to share that with me? Boy, it takes a really strong person to show you your warts up front, right?
Right.
And we are similar in that. And I think what it all leads to is this notion of fit, fit on a human level. And it's the fit between a team's talents. It's a fit between, leaders' capabilities and how well they work together. It's a fit to discover if there's natural chemistry, between people. And so I think part of what I try to do is to help founders and leaders, doesn't matter their role, like any leader, is like, look, you're the leader. It's only going to go as far as you can take it. And we've got to be really hardcore about diagnosing where you're good and where you're weak, because nobody's got the full package, right? If you don't know you don't have the full package, go home and ask your significant other where your blind spots are and, give them permission. They'll certainly tell you, right? They know. The irony is, for all these hard charging folks, the whole world knows where they stink except for them. It's just like everybody else knows all your warts, dude. I mean, you can't even trick the boss. You can't trick your peers. Okay. Yeah. So I try to get into let's be super intentional about understanding one's strengths and talents. Once we have that diagnostic, let's understand what needs to be around the team, to amplify the strengths and offset the weaknesses. And then let's discover what that authentic leadership mode is, because everybody's style is a little bit different. I know we want to categorize each other, but, being able to, show up and be fully there and play to one's natural styles and build a company system around that, and a leadership team around that. I think that's where, things go from, Jim Collins' world good to great. I mean, I'm obsessed with how do we actually get the most we can get out of things. Yeah. For my whole life, I find that, very interesting.
Yeah. I like both of those answers a lot. And, Bud, you hit on a point there of time, with young people, and it gets less and less. But of all of, the lessons people can learn from General Patton, as an example, tactics versus strategy and everything that he was really, really good at. One of the things that one of his principles was time, right? Like, I can't get back time, which is, why the Germans hated him so much, because he didn't want to waste even a second of that time in an attack or a counterattack, because you can't ever get it back, right? So for him, time was an important metric, and it's one of the better lessons of all the general and leadership stuff that I've learned. And you oftentimes forget it until you have a birthday, or you can kind of see the horizon there. Yeah, both great answers. So kind of last question. I've really enjoyed this time together. Podcast is called Meat and Potatoes. You guys have busy lives, both with work and outside of work, a lot of demands on your time. Let's start with you, Lanham. What tools do you use, whether it's archaic old tools or technical tools, to help manage your time? And then what are some other kind of tricks that you use to stay sane and stay productive?
Okay. So, I am a 80-20 person. Okay. So my hack is I literally sit down on the weekend and figure out what the top 3 things are I got to knock out every week. And I make sure I commit to those. So I'm making a trade-off. The trade is I'm going to focus on my top 3, and there are going to be other things that slide. And I'm okay with that trade-off. Right. And so it's admittedly that may be a bit selfish, in terms of how I'm thinking about it. Okay. But it truly comes down to, I sit down on Sunday afternoons. I look at stuff coming up. I figure, okay, what are my top 3 things I got to knock out? I share that top 3 with our team. Everybody on the team shares their top 3. So we figure out where we can support each other in that. But this gets to Bud's point about focus. I just got to make sure every week I nail my top 3. And as long as I'm doing that, I'm making progress. And I'm going to fumble on some other things. I'm going to be tardy in a reply, blah, blah, blah. But I'm going to nail that.
Gotcha. Simple, easy. Bud, same question.
It's I don't know who will listen to this, but I want to be real hesitant. I'm at kind of a crisis point in terms of this time management issue, and archaic. I know that email has become archaic. But if somebody would have told me 30 years ago that most days I would manage myself as an executive by how I was managing my inbox. And yet that's what I've got to figure out some way to break out of that, because what that means is I'm outsourcing my priorities. So I'm a work in progress on that. But I think that more than anything is I've learned the importance of making time to listen to what's going on in people's lives. That you talk about World War examples where they did one study that showed that privates were more likely to follow a sergeant into battle if that sergeant cared about whether or not they had dry socks.
Yep.
And concern, I think, is an incredible motivator. And I learned a long time ago that you can't see people as a means to an end. Now, that doesn't mean that businesses can afford to be social welfare organizations. The best thing we can do is when somebody's failing, they know it. But on time, I have learned to take enough time to really understand what's going on in people's life and their backstory. And I've seen the power of genuine concern.
Yeah, absolutely. Really cool. Well, I appreciate.
Hey, Garrett, can I ask you a question?
Yeah.
So this is the Meat and Potatoes podcast. I'd like to hear your favorite way you like to consume potatoes and meat.
Well, I like to get maybe a T-bone or a tomahawk steak when I can afford it, and use the Traeger grill, medium rare, just salt and pepper, and then mashed potatoes with a lot of cream and butter.
All right, man.
In the spirit of meat and potatoes, I want to use its figurative. I have been a real disappointment to Lanham in helping him get access to folks that meet his criteria in Utah. So much of my business career has been outside of Utah. I feel like Rip Van Winkle. When I fell asleep, Utah County was all multi-level marketing and BYU. And when I woke up, every time I turn around, there's a $100 billion valued company that even when they explain to me what it does 3 times, I'm not sure. Yeah. And so I really want to do better and please pay attention to the criteria that Lanham articulated. I've got to find a way to get better integrated into this segment of the economy in Utah. So that's the meat and potatoes that I'd like to get out of this podcast.
Absolutely. Yeah, there will be a lot of people that listen to this, and we'll be able to reach out. And obviously, they can go to your guys' websites to start that process and that relationship. And we'll include hyperlinks in the description of the podcast and things like that. So, yeah, thank you both. Talking about time management, I appreciate you guys taking some time out on I'm sure a busy day, and I've learned a lot, and look forward to reconvening maybe in a year and a half, and seeing who called it, or who hit the one right down the middle.
All right, man. Yeah, tomahawk steak.
Thank you.
See ya. Thank you all. Appreciate you.
Cool.